Year-to-date shares of Google are up 30% over the last year, up nearly 50% when the company announced their Q2 numbers after the bell. Is it enough to continue the upward momentum in shares of Google? Or will we get opportunities to buy the search engine giant at lower prices? We'll talk about Whiz, cybersecurity company, turning down Google's $23 billion offer. We'll go through all of the numbers, take a look at the revenues, the profits, the different segments that Google operates under, including YouTube, including Google Cloud as well, jumping to over $1.1 billion of profit. We'll go through all of the net income, and we'll look at the balance sheet, which after not having to spend $23 billion on a cybersecurity firm, probably going to look pretty good. And we'll look at the cash flow statement as well. Given how much this company is investing in AI and other technologies, how much did they spend in the most recent quarter on those investments? And then we'll come over and look at this technically, as this stock has been on a rocket ship over the last year. Can it continue to move higher? We'll discuss that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Alphabet Inc., otherwise known as Google. The company announced their Q2 numbers after the bell. Revenue coming in at $84.74 billion. That beat expectations by about $450 million. Wall Street estimates were closer to $84.3 billion. The high end, though, was $85.5, so coming underneath that. I think everything that we'll see in today's report gives us full confidence for the Q3 coming in at over $85 billion in revenue, maybe closer to this high end, $86, $87 billion worth of revenue. Certainly gives us confidence going into Q4. Election season, holiday shopping in Q4 should be a good ad turnout as it relates to Google. We'll get to the rest of the numbers here in a moment, but news crossed just today that cybersecurity startup Whiz was walking through a $23 billion acquisition deal from Google. Could this turn into be a $23 billion mistake by this company, as they say they're going to pursue a public offering, probably either maybe later this year or into next year, as this company has about $1 billion in annual recurring revenue. Could also have to do with CrowdStrike's struggles and potentially maybe new business walking through the door over at Whiz. I tell you what, when we get to the balance sheet over at Google, they've got a mountain of cash, and they've had some rumors over the past couple of months, maybe a HubSpot, which would have been a multi-tens of billions of dollar deal. This cybersecurity firm, $23 billion. I tell you what, as we move into the back half of this year, Google is likely to make a move. It looks like they've got 20 some odd billion dollars burning a hole in their pocket, and the CEO wants to make a move. That could be bullish for Google moving into the future. Now, speaking of bullish, are these revenue numbers? Last year, you had $74.6 billion in revenue. Boom, all the way up to 84.7, over $10 billion added to the revenue line. Now, what's important for investors are your operating margins from 29% up to 32% in the most recent Q2 timeframe. And so that is very important. Now, YouTube ads, something that people monitor very closely, including myself, since I get a couple of bucks from these things. Last quarter, I think it was a shade over $8 billion. This quarter, nearly $8.7 billion. Last year, closer to $7.7 billion. Some analysts saying this is coming underneath expectations. However, what you have to factor in with Google is sometimes the ad load on these videos is like insane. So it drives you to, I think it's like maybe $12.99, $13.99, their subscription model for YouTube. It's not going to show up here. So YouTube's one of those interesting assets that Google has where you don't actually know the full value of it, because they break out how much people are spending on ads. But down here in Google subscriptions, there are people paying that monthly fee to have an unlimited subscription to Google. Notice over the last year from 8.1 up to 9.3. So I think an acceleration there in the subscription is people sitting through ads, maybe getting tired of that. Now, the other exciting aspect of Google is obviously Google Cloud. We've seen a shift away from traditional cloud, which was dominated by Amazon, AWS, to a lesser degree Microsoft. Google's coming in with the new AI servers. They certainly have their own TPU product, which they've designed alongside Broadcom. They've got some compelling advantages to use Google Cloud. Take a look at this, from $8 billion up to $10.4 billion in revenue. That was over expectations by a couple $100 million. Even more exciting than that, Google Cloud is now wildly profitable. From $395 million, on a company that's generating on a quarterly basis $84 billion. I tell you what, $395 million, you could drop this on the ground. Nobody's going to notice over at Google other than maybe an employee that's lucky enough to pick it up. Well, now that's not the case. Last quarter, we were at about $900 million and some change on operating income from Google Cloud. Now off of $10.4 billion worth of revenue. Look at this, folks. $1.2 billion of operating income. This is absolutely sensational. This continues to grow. Obviously, if you continue to put up this type of growth rate on Google Cloud, doesn't seem like there's any slowdown in sight. Well, these operating profits certainly follow. Now, Google Services, the ad business, is still 29 times bigger than the Google Cloud business, but obviously those things can change over time. Your revenue, like we said, coming in at $84.7 billion. That was a cool $10 billion, little over $10 billion more than last year. But what's this company doing? Like a lot of tech companies are doing, they're controlling their costs. Gone are the days where they would grow their revenues, but their operating expenses would grow well in excess of that. Now, there's certainly some companies still in that phase, but Google is well gone from that phase. Cost of revenues ticking up. Obviously, your research and development from 10.6 to 11.8, so they continue to invest there. But look at your sales and marketing, 6.7 to 6.8, just fractional. We're talking about rounding errors of difference in your sales and marketing. And again, I'll remind you, they added over $10 billion worth of revenue over the last year on a quarterly basis, and their sales and marketing expense didn't do anything. General administrative also, we're actually seeing that drive down from $3.5 billion down to $3.2 billion. Your total costs and expenses from 52.8 to 57.3. What does all this mean? You drive $10 billion to the top line. You only increase your expenses by maybe a shade under $5 billion. Well, yeah, your income from operations go from 21.8 all the way up to $27 billion. They pay some income taxes. They earn some income on that mountain of cash that they have. Net income coming in at $23.6 billion on a quarterly basis. It's pretty much what the run rate that they're at as we see year to date. They're at about $47 billion. This is net income. This is not revenue. This is not expenses. It is straight profit to the bottom line. Now, what is that leading to over at Google? Well, they've got a giant mountain of cash and marketable securities over here. We'll see here in a moment what they're doing with this cash, obviously buying back the shares and more recently announcing a 20-cent dividend. They've got some long-term debt sitting here, but I tell you what, if Google owed you money, you're probably not too concerned about them paying you back. Now, that $23.6 billion of net income gets pulled down to our cash flow statement written right here. We get to add things back in like depreciation, amortization. That's on probably the server side, some of their equipment, the things like that. Stock-based compensation coming in at about $5.8 billion. That was basically flat year over year. Despite these results, they're not awarding more and more stock-based compensation. That's not something you typically saw in the early days, certainly of Google, but also Silicon Valley tech companies. Your net cash provided by your operating activities actually ticked down a little bit from 28.6 last year to 26. I don't think anybody's really overly concerned about that. Purchase of property, plant, and equipment. I had my eye on this. I wanted to see if we had a dramatic uptick, maybe $15 billion. Last quarter, I think you were right at about $12 or $13 billion. I'm using figures off the top of my head, so if I'm not exactly right, my apologies, but it looks like sequentially, quarter over quarter, this company's spending about $13 billion. So we're not really seeing like this massive acceleration. Upwards of 15 would have been a massive acceleration. Obviously, though, massive acceleration over last year. 6.9 billion last year on property, plant, and equipment, up to 13. So take everything with context, particularly as it relates to Google Cloud. Yes, you drove much, much higher revenues. Yes, much, much higher profits year over year, but you are spending a lot of money on that property, plant, and equipment. Obviously, cloud subscriptions, cloud services gets monetized over a relatively long period of time. Now, what are they doing with this massive amount of cash flow? Look, $26 billion in operating activities, just 13 on property, plant, and equipment. Well, they continue to buy back the stock in droves. So we always wonder, how are these stocks? They're producing pretty good results. These are pretty good results for Google, maybe even slightly above average results. This stock just continues to make higher highs, and it seems to be defying gravity. Well, they're one of the incremental buyers of the stock at this this higher price. Look, last year they bought back about $15 billion in shares. This year, $15.7 billion. They're also paying a dividend, which is brand new in the most recent quarter, at about $2.5 billion. You gotta imagine too, Google's going to turn into one of the great dividend growth companies. You're starting out at a 20-cent dividend this time next year. Wouldn't surprise me if they increase this thing 10, 15, 20, 30% over the next, maybe even 50% just in the next 12 months, as this is an amount, $12.5 billion, which again, more or less, not really a rounding error from your operating cash flow, but it's not a whole lot. So those buybacks and those dividends certainly rewarding shareholders of Google, at least the ones that continue to hold. Now, from a technical perspective, if you join us every Friday, I mean, this thing has just been on kind of a breakneck type uptrend. Hasn't slowed down one bit. In fact, more recently, we've kind of broken to new highs and really accelerated. I've got a tiny black line on here. I don't know if you can see this, but this is a moving average, 50-day, kind of a double exponential moving average. When these things turn over and roll over is when you have a top. And right now, this thing is still pointed to the sky. And there's an old Wall Street adage, the trend is your friend until the bend at the end. Right now, we're not seeing a bend in Google. They're able to hold these results. These results are good enough. If you start looking forward to the Q3, Q4, there's nothing in this that brings up any doubt that these numbers are going to be great. Company should be kind of a low double-digit grower, maybe even low teens grower in terms of revenue. And we certainly understand that from a profit perspective, the cost controls that the company is executing, certainly their gross margins ticking up from 29 to 32% over the last year. Everything gives you confidence that at the very least, Google will put up solid enough results at a valuation that's just 23, 24 times, and you're having a massive buyback, dividends. There's a lot to like here with Google. Folks, that was Google's Q2. Be sure to join us again on Friday for the Fang Stock Recap Show. Links down in the description below. Find me on Twitter. Find me on LinkedIn. Find me on Instagram. And our new channel also linked. Hopefully, you guys have a wonderful day. We'll be back later with Tesla. Good luck with your investments.